Ladies and gentlemen, it's me, James Sweeney, coming at you from the conference room here at the Modern Wall Street office, and we're going to call this a Flashback Friday interview because it's been a while since I've had the microphone in my hand, and to my left right now, I'm interviewing none other than a good friend and one of the smartest men I've ever known, Sarge Guilfoyle, better known as Sarge. Sarge, it's been a long time. How you doing, sir?
Oh, it's been a long time. Thank you for having me, James. It's a pleasure.
Well, it is indeed a pleasure for me as well. So I've got to ask you the first question today. It's Friday. It's all about non-farm payrolls. They came in 227, better than expected. What effect do you think that will have on the markets today and in the near term?
On the surface, the number is pretty strong. 227 is a high number. It was prefaced by the ADP number on Wednesday. I really like the fact that participation is higher, although that forces unemployment rate higher and the underemployment rate higher as well. So there are some negatives. Wage growth wasn't really there. But the knee jerk is people look at that headline number, and it was stronger. So you have seen a pop in the futures markets this morning. You'll probably see some strength in financial shares. I just find some concern here over the underlying numbers, especially if you look deep inside these numbers. Maybe people don't look that close. The November numbers were downgraded significantly. They are initially printed at 178. They were revised higher last month to 204 and then revised lower at this report to 164. So you had a net loss of 40,000 for November. That kind of slides under the radar.
Okay, so you're talking about mixed numbers, mixed reactions. I think what investors have been most mixed about recently has been all of the Trump executive orders and what effect they might have had on the markets. I'm not going to get too much into detail about all the executive orders that have been done. Supposedly there's more on the way today. How has the markets reacted to a majority of these orders, although they're all over the place?
Well, I think it's the reaction to the orders more than the orders themselves. It's the constant, I don't want to say rioting, but the protest. It's the left not being on board necessarily with the executive orders. I won't go into the rights and wrongs of the orders themselves, but the protest pushes out the Trump economic agenda. Now, the agenda is significant. We're looking for lower tax rates. We're looking for repatriated money from abroad. We're looking for deregulation, and we're looking for fiscal spending. So there's a lot here that will probably create economic growth. And that's what we all want. But the longer that gets put off, the longer there's more infighting in Washington, the less the market believes. And if you look at a chart month by month, you'll see that the last 30 days or so, the market's really gone sideways and stayed within a range.
Since you said the last 30 days the markets have gone sideways and stayed within a range, what do you feel will help turn the markets around in a positive light?
Well, we need to see the macro. We've seen some strong macro for January so far. We really do want to see the growth. Now, the ISM numbers have been strong. Manufacturing's been strong. The service sector, we haven't seen that. That's later today. But we expect that will be strong as well. Auto sales were not so strong. We'll get the retail sales on the 15th of this month. That's where we may see an impact there. But hopefully the rest of the macroeconomic universe falls into place and makes January a stronger month. If we can get some momentum here, you're going to be happy that you've already been in the banking shares, the consumer finance shares, some of the infrastructure names, the names that play into that Trump agenda.
Okay, so we've come to the end of the month already. It's already the beginning of February. What do you expect from the markets? How do you think the market's going to react next week with a relatively light economic docket?
There's going to be two things that impact the markets next week. Earnings season has been kind of strong, although the last few days we've seen some sloppy numbers, but overall it's been strong. And without a lot of macroeconomic data next week, we're going to rely on earnings and on Fed speak. Now, for the last week or so, we have not heard from the Fed, thankfully, because they overtalk any situation. They have been put to bed because we had an announcement this week, but next week they come back out. We're going to get Patrick Harker. We're going to get Charles Evans. We're going to get James Bullard and probably a few others as well. And as we know, they like to opine. And they tend to be a little bit aggressive in whatever direction they seem to be moving. A couple of years ago, they were overly dovish. They seem to be overly hawkish, in my opinion. I don't think we need to see a rate rise just yet until we see that growth that we've been talking about. But I'm sure they'll go there.
And last question. It's been a while. I used to do this with you all the time back in the day, in quotes. This weekend we have the Super Bowl. Super Bowl 51, I believe, is the number. I am not really a fan of both teams, but I've got to know, who does Sarge pick to win it all on Sunday?
You know, I'm really looking forward to pitchers and catchers. But if I have to pick one of these teams, I don't think the Atlanta Falcons have ever been accused of cheating, right?
No.
So I'll go with them.